If you've developed an e-commerce business as a side hustle, or even as your primary means of making income, you'll need to keep track of the money you're spending and making along the way. It sounds intimidating, but we'll help you go from fear and chaos to organized and informed, so you're following regulations and you have a better understanding of your business along the way. The bottom line is that if you're selling items for a profit, any profit, you should be reporting them for tax purposes, and it doesn't matter how much you sell. There are threshold amounts for certain things, like 1099-K forms, but those reporting thresholds are just there to help the IRS double-check. If selling online is something you do regularly, and you're making any amount of money from your business, the IRS wants you to report it. What does it mean to report for tax purposes? There are 3 main things you need to do. First, when you file your tax return at the end of the year, which means filing Form 1040 for most individuals, you will need to use something called a Schedule C form to share your sales and expense totals with the IRS. Schedule C is titled Profit or Loss from Business. In the same way that if you make a profit by selling stocks, you'd have to file a Schedule D, or if you make a profit by earning rental income from a rental property, you'd have to file a Schedule E. Schedule C is the proper way to share what you made or lost by selling online in an e-commerce business, whether that's through your own website or just being a seller on a platform like eBay or Etsy. Second, if you're generating sufficient profit to change your overall tax amount owed, you will likely need to start making quarterly estimated tax payments. Why do you need to do this? Well, think about how it works when you have a job with another company. Every time you receive a paycheck from that employer, they are withholding a certain amount of your pay from your paycheck for tax purposes. At the end of the year, hopefully they've withheld the right amount, but you may owe a bit more or get a small refund. With your own e-commerce business, no one is doing that withholding for you to help you have the money set aside to pay taxes. So this is how you withhold for yourself, and the IRS wants you to do this. Third, if you're selling on your own website as opposed to selling through a marketplace like eBay or Amazon, you'll need to collect and remit sales tax. We're not going to go into all the details on this right now, since eBay, Amazon, Etsy, Poshmark will take care of this for you. But if you outgrow those platforms to build your own website, it's something to keep in mind for future. That's all there is to it. 3 main things to remember for reporting: the Schedule C, estimated taxes, and sales tax if you're selling through your own website. In our next video, we'll talk about what gets reported on a Schedule C form and how to gather the right information to fill that in.